Hey everyone, welcome back to Corporate Decoder, the place where we untangle the wild world of corporate filings, often revealing some surprising plot twists. Today we are looking at GoldMining Incorporated's latest filing, a document that at first glance seems pretty standard, but let's see if there are any hidden treasures or perhaps some red flags buried within. This is a Form 8, an important document that companies file when something significant happens. Think of it as a company's way of giving you a heads up about major news that isn't part of their regular financial reports. It is like when a movie trailer drops, giving you a glimpse of the exciting stuff to come. The main event we are diving into happened on the 12th of December 2025. This is the date that really matters for what we are about to discuss. So what happened on that December day? Well, GoldMining Inc. made some adjustments to how they plan to raise money. Specifically, they boosted the amount of common stock they can offer. Imagine a company has a certain amount of stock they are allowed to sell to investors to get cash. They decided they needed to sell more than they initially planned. They also talked about warrants. Now these are like special options that give holders the right to buy the company's stock at a set price. In this case, $13 per share. It is like having a coupon to buy something later at a price you locked in today. In this filing, they are noting changes related to these warrants as well, which means they are actively managing these financial instruments. This is where it gets interesting. The company changed the players involved in selling their stock. Think of these agents as the deal makers or the investment banks that help the company sell its shares to the public. They added new ones like Ventum Financial Corp and Stifel Nicolaus and Company Incorporated, and let go of others like Laurentian Bank Securities Inc. and Roth Capital Partners LLC. This kind of change can sometimes signal a shift in strategy or a desire for different expertise in how they manage their fundraising efforts. It is like changing coaches when you want a new game plan. These securities, the common stock and the warrants, are traded on the Nasdaq Stock Market LLC, a major stock exchange. This means they are publicly accessible to investors. This section here, Other Events, is essentially the core of this report. It tells us the company is filing the prospectus supplement to allow for this increase in the shares they can offer under what is called an at-the-market offering agreement. This agreement lets them sell shares into the open market over time. And to make sure everything is on the up and up, there is an opinion attached from legal experts Haynes and Boone LLP. This opinion basically says that the shares the company plans to issue are legally sound. It is like getting a seal of approval from the lawyers that everything is being done by the book. Then we have the exhibits. This is where you find supporting documents. The opinion from the lawyers is included here, and also their consent to be used in this filing. It is all about transparency and providing the necessary paperwork. And finally, the report is signed off by Tim Smith, the Chief Executive Officer of GoldMining Incorporated. This confirms the company is officially acknowledging the information in this report. So what is the big picture here? GoldMining Inc. is making moves to potentially raise more capital by increasing the number of shares they can sell. They've also shuffled the team of financial partners helping them do this. This could indicate they have plans for expansion, new projects, or perhaps need more funds to cover ongoing operations. The addition of new co-agents and the termination of others suggest they are actively managing how they access the financial markets. It is a common practice for companies to adjust these agreements as their business needs evolve. The fact that they are getting legal opinions and filing these documents shows they are operating within the regulatory framework. It is always worth watching how companies choose to fund their operations and who they partner with to do it, as these decisions can significantly impact their future growth and shareholder value.